Yeah, go for it.
Exactly. And the job they found like there was a bunch of
Alright everybody, I think we'd like to get started here. There might be a couple more people filter in. I'd like to introduce Mike Wolf to come up to the stage here and to his talk. And thank you very much all for being here. My name is Tim Reed, for those of you that don't know me. And I'll hand it over to Mike.
Thanks, Tim. Wednesday night, and it's like winter in Calgary, and when Tim said he wanted me to, I actually live in Calgary, and I don't spend a lot of time here, but I spend a lot of time on the road, especially in the U.S. these days. And Tim was asking when do I want to come and speak at his event, and so I was looking, of course, at weather, thinking, well, April should be pretty safe. It started off pretty good. A couple of days ago it was nice. I don't know what happened today. So in any case, I made it. I'm happy to be here, and I'm happy you guys all can make it. As you can see, we're prepared for this many people, so I thank you all for coming out. Usually when we get X number of sign-ups, usually 10 to 20% don't make it. I think we actually have more people than we even had signed up for, so that's great. That's a good problem to have. So for those of you who don't know me, I've been investing for around 24 years. I started off right here in Calgary. This is my home base. My very first revenue property was actually in Deer Run, and happened to do very well with it by mistake, because I didn't really know what I was doing back 24 years ago. But over time, I've managed to figure some of this stuff out, luckily, and it's been an amazing career for me. And so I love to give back, and I love to help people that are either just starting out or people that are stuck somewhere in their real estate investing career. And for me, I mean, this has been the most phenomenal roller coaster ride. Started off a lot more ups and downs back in the olden days. These days I have things a lot more dialed in. I've got some pretty good teams. I've got a lot of people on my speed dial that are a lot smarter than me that help me out when I get stuck. And this is stuff that will happen if you stick with the real estate game. So you'll notice I don't, this is actually for Tim, I don't actually do a PowerPoint presentation, not that there's anything wrong with it. But I like to make this all about the people who come to the events. I want to answer your questions. I don't really have a set program of what I'm going to teach. I'm going to basically feed off of what you guys do. And in 6 days I'm going to be speaking in Winnipeg, and then a few days after that I'll be speaking in Las Vegas. And every talk I do is totally different, and it's based on what you guys want to hear, what you need to learn to get over the hurdles that you're at. So I'm going to basically let you guys ask me some questions. I'll have a little bit of structure and try and give you some reasons why I do what I do and how I got to where I'm at. But then after that, I'm going to leave it up to you guys to let me know what some of your biggest questions are, what some of the hurdles are, what are some of the stumbling blocks that are keeping you from getting to your goals. And so I'll tell you a little bit about my story, though. I started off, as I mentioned, right here in Calgary. And back in the day, I used to work for TELUS, which back in those days used to be Alberta Government Telephones. Some of you might remember that, really dating myself now. But I remember I was actually, I'd gone to University of Calgary, and my parents wanted me to be a lawyer, and so I thought I didn't know what I wanted to do, so I actually got a degree in psychology, because there's no pre-law program at U of C. You have to get a degree in something else first, and then you can apply to law school. And while I got this degree, I managed to rack up a whole ton of student loans, and I decided, well, you know what, before I go and get another degree, I think I'd like to get these things paid off. And I had a friend whose mother was a manager at the phone company, and so I thought, well, that's pretty good. It was union, it paid really well, and it was easy for me to get that job because of my connection there. So I took the job, and I realized pretty quickly that the corporate world wasn't really for me. I didn't really enjoy it. And the worst thing was, because it was union, I would be the last person to choose what shifts I wanted, so I'd always get these splits, and I'd have to work 8 in the morning till noon. Anybody knows me knows that I don't like to be up at 8 o'clock in the morning. I'm not a morning person. And then I'd have the afternoon off, and I'd come back and work like 6 to 9 p.m. And so it took up my entire day. And TELUS, AGT back then, they're downtown. I lived out in the burbs. And so it took up my entire day. I didn't have enough time to go home. The only good thing was we were allowed to trade our shifts. And I would always try to go for the latest shift, because I'm a night party animal. And so I'd always try to find the person with the latest shift. And I go to them and say, hey, listen, I want your shift. Will you take my split? And they always laugh at me, say, not a chance. But quite often they'd say, well, you know what, I don't have to do this really late shift. If you got me like a 9 to 5, I'd do that. And so I'd go and I'd trade with 10 different people to get this person the shift they wanted so that I could have the shift I wanted. And everybody else who worked at the phone company, none of them could get rid of their splits. But I almost never had to work a split. And so everybody told me, Mike, you got to go into sales. And so I still don't consider myself a salesperson by the traditional sense of that word. I'm not, you'll see this presentation is not going to be very salesy. There's definitely ways to work with me if you want to, but I'm not going to push it down your throat. But anyway, I never really thought of myself as a salesperson. But I decided if I am going to sell something, I might as well sell something expensive where there's good commissions. And so I got into real estate. I started off as a realtor right here in Calgary. I worked with Second Group and then Maxwell Real Estate after that. And that's how I got my start. Now, for those of you who are realtors, you probably, and if you're also an investor, you probably know that being a realtor isn't really a good training grounds for necessarily becoming a real estate investor. Those are two very different worlds. But when I first started, I was very fortunate because most realtors, they kind of get into the game because they think it's easy money, because they see a small percentage of realtors are driving fancy cars and doing really well for themselves. That's not typical. I was very fortunate. I started off quite well out of the starting gate because all these people at the phone company wanted me to represent them because they thought I was this master negotiator, and they all wanted me to help them find a home and negotiate for them, or to sell their home to get them top dollar. And so I got a lot of momentum right out of the starting gate. But I got really sick of that too, because after a while, you know, you're driving people around all day long. They're looking at homes and they're saying, oh, well, you know what, I love the layout, I like the location, but I hate the color of the paint. And I'm thinking, really? Like, how hard is it to paint a house or change the carpets? That stuff's all easily changeable, but a lot of people don't see it that way. They only see what's in front of them. And so, as luck would have it, one of my friends at the phone company sent me a referral, and this person wasn't looking to buy a home to live in, they were actually looking to buy a home to invest in. And when I started to work with them, and I started to see what they were doing, and how they didn't even care, they could care less about the color of the carpets, they didn't care about anything except for the numbers. And that really resonated with me because I'm a numbers guy. I love to analyze real estate deals now, but even back then, I always liked to look at the numbers and look at the potential of the property, not necessarily what was right in front of me, but what the potential was and what I could turn that property into in order to make a profit. And so when I saw what he was doing, I realized, okay, this is what I want to do. And that was probably the first time in my life where I actually felt like I knew what I wanted to do. So like I said, when I originally wanted to go to law school, that's because my parents wanted me to, and I had no other, really, any aspirations as to what I wanted to do. When I worked at the phone company, I remember it was a summer, and there was a policy, we were allowed to wear shorts, but they had to be, I think we were allowed to have an inch from our knees. And one of the managers actually called me into her office with a tape measure and measured the distance from the bottom of my shorts to my knees and sent me home because it was like 1 1/4 inches. And that's when I really drew the line and said, okay, this is not for me. I don't belong in the corporate world. I don't really think I want to be a lawyer. This was the first time though when I met this investor and I started to find him deals. I realized this is what I want to do for the rest of my life. And that, like I said, was, I was 25 years old at the time. I'm 49 now, so half my life I've been doing real estate. And so, what ended up happening though is back in the days I did all my real estate close to home. I thought it made sense to invest closer to home, so I did everything in Calgary. And over the years I realized that was a really big mistake. And so a good friend of mine happened to move to Las Vegas probably about 8 or 9 years ago. And at this time, I'd become quite successful in the Calgary market. And so I had quite a few properties. I was living off the passive income that was coming off these properties, but I was still continuing to invest in real estate because it's my passion. I still love to do it. So when a friend of mine moved to Las Vegas, it gets in your blood, where everywhere I go, even if I'm not even planning on buying real estate there, I've got to go look at open homes. I still do that to this day. I still go look at properties everywhere I go. And I had no real intention of getting started in the U.S. or buying properties there. I really had no, I was doing very well here. I had no reason to go, reinvent the wheel. But what was happening is every time I'd go back, I'd go visit him usually once a month or once every 2 months. And every time I'd go back to Vegas, the prices kept going up and up and up and up and up. And I thought, you know what, I've got to take advantage of this opportunity because, Calgary was pretty stagnant. It was a slow and steady sort of game. And Vegas was going up extremely quickly. So I bought my first property down there. I had no idea. I knew how to do the real estate. I knew how to flip homes inside out. I knew how to fix them, rehab them, resell them. There was no problem with that. I had no idea though, the tax implications, how to move my money back and forth, how to deal with the IRS, all these different things. I had no clue. How to convert my currency, all these things, not a clue. And so I had two choices. I thought, well, I can either try and figure all this stuff out, and then I can start investing, in which case I probably would have missed the opportunity, or I could just figure it out as I go. I'll just make the money on the real estate. In real estate, money fixes everything. If you make a mistake, you can always fix it if you're making enough money. And so that's exactly what I did. And over time, I basically, I was buying these properties, we were selling them, did it over and over and over again. And all my friends here in Calgary thought I was nuts, because back then a home in Vegas was very similarly priced to one here, except that our dollar was pretty much where it's at now, like in the 70s. It was, the exchange really sucked. So my friends would say, hey, cash got 100 grand, it turned into 70,000 US. Why does that make sense? And anyway, I did very, very well with it. And then the recession kicked in, and that changed everything. So all of a sudden, our dollar shot up to par, because the US dollar got very, very weak. Vegas dropped 80%. In some parts of Las Vegas, it dropped 80%. Same with Phoenix. It dropped big time. And all of a sudden I started to get calls from all these people who thought I was insane when I first started investing there, and they said, hey, remember we used to make fun of you? Well, now we want to buy in Vegas. How do we do that? Or we want to buy in Phoenix, we want to buy in Florida. And I started to get all these people coming out of the woodwork asking me how they do this stuff. And so I had to figure this stuff out as I went, but I love teaching people, passing on the things that I've learned so you guys don't have to go through all the struggles that I did. And so now I do different things. These days, Vegas doesn't really make a lot of sense anymore. Neither does Phoenix, neither does Florida. So all those markets, they shot up considerably, and the rent has either stayed the same or in some cases it's gone down. And so the return on investment's gone down. But I'm very bullish on markets such as Houston, Texas, San Antonio, Austin, Kansas City, Missouri. I've got a bunch of different cities where I've got teams set up, and we do a lot of different types of deals, and I help other Canadians who want to get started in the market, either by creating a turnkey opportunity where the homes are already fixed up, the tenants are already in place, we've got people that will collect the rent for you, you don't have to do anything. Or for other people who want to get their hands dirty, I do training classes on how to deal with all the issues that I didn't know how to do. But I'm here tonight to answer all your questions on how to get. Some of you I know are probably just wanting to get started. You've never done a real estate deal. Others may have done a lot of deals in Canada, but never crossed over to the U.S. And some of you have already. I have several clients in here that I know have invested in the U.S. and we've done some deals together. And I'm glad you guys all showed up, which is great. But I want to answer all your questions, and I can answer questions both in regards to doing deals here in Canada as well as the U.S. But I want to show you, first of all, why after I started investing in the U.S. I haven't really done anything in Canada since. And the biggest reason, and this is actually a big hurdle for a lot of people, is actually the taxes in the U.S. are actually much more favorable. The system is much more designed to support entrepreneurs down there. And they really encourage entrepreneurship because they know that entrepreneurs are the ones that create jobs. They can tax to death the employees and let the entrepreneurs make the money. So they put a lot of different systems in place. So one of the great things about the U.S. that we don't have here is called the 1031 exchange. My handwriting is horrible, so I'm going to apologize in advance. But that is supposed to say 1031 exchange. And basically what that is, it's if you buy a piece of property, you hold it for more than a year, and then you sell it, and you buy another piece of property, you reinvest, you don't pay any capital gains tax on it. It gets deferred. And so you can keep buying properties untaxed until you decide to stop investing in real estate. And frankly, if you're making money in real estate, why would you ever stop investing in real estate? It really makes no sense to stop. I'm a really big fan of creating passive income and having money coming in while you sleep. And if you buy property strategically, it makes sense to build your portfolio as big as you can. Strategically, you don't just put any properties in there. You buy smart and you put properties in there. But for example, if we buy a property, there's an auction that takes place in Texas, and some of you have been on my tours, and we see single-family homes starting at $10,000. So imagine you buy a property for $10K, and you flip it, you hold on to it for a year, you collect cash flow, and then a year later you decide to sell it for $60,000. I'm just making up numbers here. That $50,000 profit will go untaxed if you reinvest that $60K into another property, or 2 or 3 or 4 properties. In Canada, every single time you do a transaction, the government's going to have their hand out, they're going to want a piece of that, Because you might only be left, instead of 60K, you're only going to have 40K. Now your first deal doesn't make as big a difference. You'd be pretty excited if you do a deal like that. But when you start to get to your second, your third, your fourth deal, you're going to have a lot more properties in your portfolio if it's going untaxed. If the government's taking a piece of it every single time you do a transaction, you're basically going to be building a lot more slowly. So that's one of the biggest advantages of the U.S. right there. Obviously, the other advantages are the homes are a whole lot cheaper. I mean, that's not even a shed in Calgary. And I'm not saying this is typical. There's certainly other cities are more expensive. There's more expensive ways to acquire properties. However, if I look at a place like Atlanta, which is booming, there's tons of jobs being created there. That's one of my favorite cities. A home there is approximately, I'd say, 1/7 of the price of a property here. And I think we're actually heading for a lot of people are predicting a bit of a correction in Canada, or maybe I'm being very conservative when I say a bit of a correction, a big correction. But when we see the advantage, we see the cheaper prices, we see that we get to keep more, not just make more, we can keep more. And then we look at the return on the investment. We look at what's happening in the U.S. It used to be that the American dream was having that, everybody has a home with a white picket fence. Well, the recession changed all that and turned the U.S. into a country of renters, a nation of renters now. And a lot of these people that used to own homes have now turned into renters, which is driving up the rental. So when I look at a market like Atlanta, we can get a really nice single-family home that will probably be worth $400,000 to $500,000 here at least for $80,000 to $90,000 there. And that $80,000 property is going to generate probably $750 a month in rent. Now, if we go to Kansas City, an $80,000 property will give us $900 a month in rent. So if we look at the ratios of what's going on in the U.S., we compare that to pretty much any major Canadian city, we can't get we can't get those sort of numbers in Calgary. If you're buying a $500,000 home, you're not going to get $5,000 a month in rent. And Calgary is actually pretty expensive for rent, especially after the flood. There was a shortage of properties. I don't know if that's still the case. But even so, the rent went up, but it didn't go up that much. So I'd much rather have $500,000 homes in a city like Atlanta than one single-family home here. In addition to that, when you look at where the U.S. is, real estate's very cyclical. So if we look at where it is on the, let's do that for now. So everybody knows you're supposed to buy low and sell high, and very few people do that. And the reason that they don't do that is when we're down here, there's a lot of fear in the market. The news is always bad. Nobody is talking about anything positive. There's tons of foreclosures going on. People are losing their jobs. And most people get very scared. But more importantly, there's no financing available. It's very hard to get money from a bank. The banks will they just totally shut down over here. And when we get over to here, here, and here, the banks can't wait to lend you money. And that's why the U.S. got in big trouble in the first place. They were lending money to everybody. They didn't really care. They didn't care if you had a job. Well, it's not that they didn't care, but they get you to write your own job letter, basically saying, hey, I work at McDonald's, I flip burgers, I make $200 grand a year. No problem, how much do you want to borrow? So when you have that sort of, approach, you're destined to see a big correction once these mortgages go into default, and that's exactly what happened. So it's really the lack of financing that makes it really tough for Americans and also foreigners to buy U.S. real estate. Well, I've changed all that because we now have financing in Kansas City, for example, where you need 35% down. You need very minimal, you have to have a job. But other than that, and show that you're actually making some money and you can support the loan. But with 35% down, you can buy a single-family home for starting around $70,000 to $80,000, going up to $100,000. So there's a lot of different opportunities. But when we look at where the U.S. is right now, each market's different. So when we look at what we call the trophy markets, which are Las Vegas, Phoenix, all the Florida markets, those are our trophy markets. They've already bounced back considerably. They're nowhere near the bottom anymore. They've bounced back. They're nowhere near the top, but they're not near the bottom anymore. But when we look at the different emerging markets, Atlanta, Kansas City, some of the Texas markets, they've started to come back a little bit, but they haven't made that big bounce yet. There's still opportunities to get in on these properties. Now what we're going to probably see, if we listen to what a lot of the economists are saying, and I tend to believe it, Canada's in for a big correction. The reason for that is Canadians have more debt than we've ever had in our history, ever. And we're managing it because of record low interest rates, so we're handling it. But as these interest rates change, and we're of course expecting some hyperinflation because the U.S. printed trillions of dollars, And so whenever you do that, eventually the interest rates are going to rise. Right now things are at record lows. They can't stay that way. And as that starts to happen, we're likely to see Canadians unable to afford these $500,000, $600,000, $700,000, $800,000 homes. These are, I mean, that's $800,000 in Calgary doesn't get you that much of a house. Vancouver doesn't even get you a house. So people are going to be unable to afford all these things that they've acquired, their homes or boats, all these toys that they bought. And Canadians, we've been pretty lucky. We've been very insulated from the recession, relatively speaking, compared to the U.S. The U.S. now is in a much different spot. The U.S., most Americans have gotten rid of their debt. They lost their homes. Not because they paid it off. They lost their homes. They went bankrupt. They're starting with a clean slate. So what we're likely to see is we're going to see that the Canadian and the American markets are probably going to get a lot closer to where they are. Just like when I first started in Vegas, as I mentioned, the home prices were very, very similar. Now, a home in Vegas is probably a quarter of the price of one in Calgary. So what we're going to see is as the economy shifts, we're going to see American real estate prices probably going up, Canadian prices are likely to go down. And so if you're buying these properties, which are one, cheaper, two, you're going to pay less tax, you have to keep more of what you make, and three, you're much more likely to see appreciation in the short and medium term than you are going to see in Canada. It makes a whole lot more sense. So, you know, when you're dealing with these, like I said, these very inexpensive homes, it's also easy to do deals with none of your own money. And I'll show you what I mean. So if we go to Kansas City, where I mentioned you need 35% down. So let's take a $100,000 home. And a $100,000 home in Kansas City would probably be $600,000, $500,000 to $600,000 here to give you an idea of what that would look like. So you need 35% down, which is $35K, which means you're going to be financing $65K. So what I teach my students how to do is to basically go raise this $35K and give somebody a 35% interest in the home. So somebody's going to pay the cash, that's going to be the down payment. Basically, you're going to qualify for the mortgage for the $65,000. You're going to make that payment. You're going to get 65% of the cash flow, 65% of the appreciation, and not have to take a dime out of your pocket. And it's very easy to do once you know how to do some of this U.S. investing. Once you know how to answer all the questions, like how do I deal with the taxes, and how do I deal with converting currency, moving money back and forth. Once you know how to do that, there's going to be a lot of people, especially other Canadians, that say, oh, I'd love to invest in the U.S., but I don't know how. So it's all a matter of educating your business partner. A lot of people come to me and they say, well, I can't get into real estate because I don't have any cash. Well, there's a whole bunch of different things that you could potentially bring to the table. One is education. One would be the ability to qualify for a mortgage. I'm not going to write them all down. One would be having a team on the ground. And by the way, I have teams in every city that I work in. I very rarely go to these cities to work. I sometimes go there just to visit. I don't actually hang out there working because I have teams that do most of the work for me. So I'm really big on creating what I call passive income. Not creating recurring income is one thing. When you're collecting your own rent, though, it's much like if you bought a McDonald's franchise and then you went there and flipped burgers. Collecting rent on your revenue properties is probably the worst job in the industry, in my opinion. And no offense to any property managers, but I could not do that job anymore. I used to do that. So there's different things you could potentially bring to the table. And to get people to fund your deals is a lot easier than trying to save the money. So for instance, if you don't have $35K right now, if you're going to a 9-to-5 job, for most people it takes a long time to accumulate $35,000. There's a lot of people right now with $35,000 sitting in their bank account and they're scared to invest, they don't know how to invest, and they need somebody to basically show them how. And so if you meet a doctor, a lawyer, an engineer, a lot of these people have that money sitting there and they have no clue what to do with it. If you become a solution for them and you bring to the table, you add value to them by getting them over the stumbling blocks that they have, you could actually do a whole lot of deals without a whole lot of money in the U.S. very easily. So I'm going to open it up to you guys. I just wanted to give you kind of just a little bit of an intro and give you some information to get you started. But I want to open it up to you guys. And do you guys have any specific questions? Something? Go ahead.
Well, I've heard that it's almost impossible for Canadians to get a mortgage in the U.S. That you had to purchase the property 100% outright. So I'm curious to see how you're going about that in Kansas City.
Right. So her question for you guys in the back, she said, I hear it's very difficult for Canadians to get financing in the U.S. And so she's curious how we wind up financing Kansas City. Well, the answer to that is until recently we didn't have any financing either. We were doing all cash in every city that we worked in. And then I had a call from a friend of mine in Vancouver who said, hey, I know some people in Kansas City that have some properties and they're willing to put some financing on there. Would you consider teaming up with them? And I said, hey, if they're, and I've heard this a million times, I get people calling me up all the time saying, oh yeah, we'll fund your Canadian investors, no problem. And they always say that, and then they always, you know, my clients put in an application, and then they get turned down. And I see it over and over and over again, so I was very, very skeptical. So I had a client of mine who I knew wanted to buy some revenue properties. We used him as a guinea pig. The deal went through very smoothly. He got approved. And so this is private money. It's not from the banks. The big banks will still turn us down. And they're not even lending to Americans, let alone foreigners. But it's all private money, and it's been working out really, really well because a lot of Canadians are in that boat where they don't have enough to go. They don't have 100,000 sitting in their bank, but they have 20 or 30 or 35,000 in their bank, and it allows them to get started in the market. So the key is really to get yourself into the market whatever way you can. Like I said, if you don't have your own money, you can get lines of credit here in Canada. You can get refinance some of the properties maybe you have here, or look for some of these money partners. There's a lot of people, like I said, with money sitting on the sidelines, and if you can be a solution for them, if you can say, hey, you know what, I've got a team on the ground, it's not going to take up any of your time. You go to a doctor and you say, oh, well, we'll get a property, but it's going to take up a lot of your time. They're going to say no, they're busy. So if you show them where it's not going to take any of their time, you got a team on the ground, you got the strategy, you got the financing lined up, and you're going to do all the work, they're just cutting a check for a relatively small amount of money, they're probably going to do more than one. And so that's what we've seen. I've had I had a client who just purchased one, and he did exactly that. He found a money partner, and they bought 3 right out of the gate, and they're planning on buying more. So, but yeah, the financing is available right now. I've tested it, it's working, and so far so good. Go ahead.
What would the interest rate be on private finance?
The interest rate, she asked what the interest rate is. The interest rate is 7.25%, which for private money is actually pretty good. And when you're doing small amounts, like $65,000 mortgage, payments are very minimal, but the property's cash flow very nicely with that. Oh, go ahead.
Was it just in the Kansas City area, or is it others? Like, for example, I was looking down in Florida. Dave Hare, by the way.
Hi.
I know I was seeing that Desjardins Bank, which is Canadian Bank, has offices down in Miami. Will do financing like 20% down. Outside of Miami, they'll do it's 50%. I also checked with a broker as well too in Florida, and it was like 100,000 minimum, 20% down, that type of idea. So
yeah, are they doing that for investors or is it
for investors?
Okay, yeah, I haven't done anything in Florida in a long time. And back in the day, it had to be a residence, your second residence. And so I never encourage my clients to lie and do mortgage fraud. But yeah, that's pretty much the only way they would lend back in the day. So I'll definitely look into that.
Yeah, I'm currently doing the research right now. I'm just trying to get into that. And again, is it just for that area, particular area that you were looking at?
It is right now. Now the same lender is looking at teaming up with me in Atlanta now as well. Yeah. So we may have some stuff going on in Atlanta, and then potentially any future projects. But right now, I just want to test the waters in Kansas City before I don't like to expand before I test the waters. So
okay.
Go ahead.
On average, in an area like Kansas City or Atlanta, sorry, just slipped my mind. What is your the rate of return on average, and how long are you essentially waiting to see some?
Yeah, well, with the financing in place, you're probably looking at 12 to 13 cap, somewhere in there. Okay. Obviously, to me, a lot of people get really hung up on what's the return going to be on the what's the cap rate going to be, what are you going to make on the cash flow, and a lot of people forget that most people get wealthy actually from the appreciation. That's where you make most of your money in this game. And so to me, I look at a lot of people that they'll call me up and say, oh, I can get. I was looking in Detroit or Ohio or wherever, and there's like 17% returns. But 17% returns on paper, you're never actually going to see that in real life. Because what ends up happening in your cities where there's very high unemployment, there's people losing people are losing their job all the time. They have no ability to pay the rent. You're rarely going to actually see that rent coming in. On top of that, every time people move out, you're repainting, you're recarpeting, you're dealing with issues, you have nonstop headaches. And so these are actual real returns of what, I mean, they're conservative, put it that way. So always be really careful when you're looking at that. When you're just looking at that one number, like what are the returns going to be, and always consider that the big money comes in the end. If you consider back to our grandparents, a lot of them did well. They bought a home. They didn't move around as much back, and they lived in the home. They paid it off, and it was worth a whole lot more when they retired than when they bought it. And that's how most people get wealthy in real estate. A lot of investors, they just focus on what's the cash flow going to be, and then they get really hung up on that. They buy the wrong properties in the wrong cities and the wrong neighborhoods, and they never really get those returns. And they end up getting out of the industry because they had too many headaches. And so it's really important to, one, make sure that the returns that are being quoted are accurate and realistic. Also that you're going to get a really good chance of appreciation. So for those of you who don't know, if you were to throw a dart at a map of the United States and you were hit the bullseye, that would be Kansas City. And so there's a lot of transport companies, and there's a lot of pretty much all the goods that are sent across the United States quite often originated in Kansas City. It's right in the middle of the country. So there's lots of jobs being created. It's a beautiful city. Really good opportunity to get into that market. And the cash flow is nice, and those are realistic returns, and we have people that have jobs that can actually pay the rent, and that's really the most important thing. So I always really caution people to never just focus on one number. Focus on what are the chances of, not just what am I going to get every month. Obviously we want positive cash flow, that's important. That makes our investment sustainable. If we're taking money out of our pocket every month to support our investing, then we're in trouble. But then on top of that, we also want to get the big win, which is that appreciation, which allows us to scale our business, get more properties, turn 1 into 2 and 2 into 4, and keep building on that. So, but thanks for that question. Go ahead.
A couple questions. One is the type of corporation in the States. Is it a C Corp, or what are you incorporating as?
Okay, so that is, so his question was what sort of corporation should you set up in the States? And that is a question that I can't really answer here. And the reason for that is it's not one size fits all. So if I were to sit down with each of you individually for an hour, I would ask you, well, what do you do for a living currently? What do you have for assets? What do you have for liabilities? Are you going to be flipping homes? Are you going to be holding homes? I need to ask you a whole bunch of questions. It'd be much like if you went into if you went to the doctor, and the doctor didn't even ask you what was wrong. They said, oh, just take this red pill, and you'll be fine. And then you found out you had a broken arm. He gave you the red pill for a broken arm. He gave somebody else a red pill for cancer, somebody else for flu. It's the same thing with accounting. It's not one size fits all. I would need to know a lot more about your situation. And so for some people, when you're just starting out, if you don't have a whole ton of assets, you can actually buy your personal name. Nobody else will teach you this because they're all trying to sell you C Corps and LLCs and all these different things. I'm a big fan, for most people, hey, let's make some money first, and then let's use our profits to pay for the things that we need. Now, that's not for everybody, so don't go do that. If you're very high net worth, you definitely have, if they have a bunch of assets in your personal name, there's a whole lot of things I would recommend besides that. But if you're just starting out, for a lot of people, I'm a big fan of let's make some money first. So, but if you were to send me an email, I could answer, we could talk, and I could give you some ideas. The bottom line, though, for everybody is you should always, at some point, be talking to a cross-border specialist to find out what your best situation you can put yourself in tax-wise is. Because if you go to a Canadian accountant, I get Canadian accountants who call me up all the time. They say, hey Mike, I've got a client, he's investing in the US, what do you recommend for him? Well, you know, and I get American accountants phoning me out too, saying, hey, I got this guy from Canada, he's investing in the US, what do you recommend for him? What you need is you need somebody who's trading on both sides of the border, and that's a cross-border specialist. I have people on my team that can help you with that, that's what they do. And they've got the training on both sides, they have the whole puzzle instead of just half of it. And so you have to be really careful where you get your information from. So I strongly recommend, even after if I talk to you, confirming with a cross-border specialist, because I'm not an accountant. I've been doing this a long time, so I know what works for me, and I know what works for some of my students. But if I were to make a mistake and give you the wrong advice, if I were to say, yeah, just go get a C Corp or get an LLC, if I give you the wrong advice, it could potentially cost you hundreds of thousands, not millions of dollars in the long run, so I'm not going to do that.
Okay.
I'd be doing you a disservice. But quite often you go to these events, and people always have this solution, this one-size-fits-all solution. The reason they do that is they usually want to sell you a high-priced coaching package, And they know the thing that's stopping most Canadians is they're scared, oh, what about the taxes? And so if they know you're not going to buy any of their stuff, if you don't have the taxes figured out, they're going to come up with a solution. It might not be the right one, might not be a good one, but it's a solution, and you don't know what you don't know, so you just trust them, and it could cost you a lot of money. So, so I'll have a private conversation about that.
Okay.
Oh, go ahead.
Commercial properties.
Mm-hmm.
I'm talking about residential.
Right. I don't do a whole lot of commercial. I have people on my team that do. I can certainly hook you up with people that specialize in that, but that's not my thing. I love single-family residential. I do some apartment buildings here and there, but mostly single-family makes up the bulk of my portfolio. So I can talk on that. On commercial, there's definitely opportunities. It obviously got hit really badly too. And the commercial always follows the residential. I think there's going to be better opportunities down the pipeline for the commercial. But if you contact me, I can hook you up with people that are doing commercial on a regular basis down there.
Okay.
Anybody else? Go ahead.
You pay, when you bring your money back from the US back to Canada, you pay tax twice?
Okay, so the question is, when you move your money back from the US to Canada, do you pay tax twice? If you're there's a number of different ways you could be potentially set up. There's ways to set yourself up where you would be paying tax only in the US. There's ways where you'd be paying in both. Now the good thing is there's a treaty between our two countries. And so basically if you were to make money in the United States, you're going to pay the IRS first. And then you're going to have to, if you're taking the money personally, you have to declare your worldwide income. And so let's say you did, let's do that example earlier. You flipped a house, you made 50 grand. So let's say in the US that you weren't going to reinvest, you're actually going to pay the capital gains tax on it. If you're going to reinvest, you can avoid that. But let's say you're going to take the cash back. So you made $50,000. Let's say in the US, your tax on that would be, I'm just making up a number, $10,000. If you had done that same transaction in Canada, it was $17,000. What's going to happen is when you do your Canadian tax return, you're going to say, I owe you $17,000, but I already paid the US government $10,000, so I owe you $7,000. So you're going to pay the same tax. You'll pay two different countries. You're going to pay the same tax as if you'd done the deal in Canada. But I can teach you how to be more strategic than that, so you're not necessarily paying the Canadian government unless it's advantageous to do so. So to answer your question, you will pay two countries, but it's not really double tax. It's not like you're going to pay $17,000 here and $10,000 there, and you're going to get smoked on. It doesn't work like that because of the treaty between the countries.
What about the withholding tax of 10%?
But there's withholding taxes. That's a whole different story. There's withholding tax. For those of you who don't know, withholding tax, basically the U.S. government, when you are collecting rent, or when you flip a property, the U.S. government is going to hold a certain portion of that. They're basically holding it hostage because they don't know who you are. They have no idea if you're a Canadian, you're not in their tax system, they don't have a clue who you are. The way around that is either to have a corporation, because if you were to get a C Corp, for example, C Corp is a U.S. entity. And so now they know how to get a hold of you, they know who you are, you're now in their tax system, or if you have what's called an ITIN number, I-T-I-N. If you have an ITIN number, you're basically purposely putting yourself in the U.S. tax system. You're saying, hey, my name is so-and-so, here's where I live, here's my phone number. And now they don't withhold. They're only withholding to make sure that you file a tax return at the end of the year. So they know if you have all the money, it'd be very easy for you never to pay them. If they're holding the money, they know you're going to file a return to get it back. So withholding taxes are totally avoidable with the right setup. Once again, you can contact me because that's a whole conversation, but it's totally avoidable with the right structures. Oh, go ahead, Cal.
So if I'm buying a rental property portfolio in the States, so I don't have the luxury to just refinance whenever I want like Americans. So what's the strategy? Just private money, or what do you to build?
Okay. So Cal's question was, he being a Canadian, he doesn't have the ability, at least at this point, to do a refi on his property. So how do you continue to build the portfolio? And to me, the best way to do that is to get joint venture partners, find money partners. Don't waiting for your property to appreciate is great because it will happen. But if you can find other people that already have the money, once again, adding value to them. Because there's a whole lot of people that are stuck. Imagine you're a doctor, and by the way, no offense to any doctors in the room, but I've worked with a lot of them, and they're usually really bad with money. And so they have, from the outside, they look like they're doing very well. They have the big home, they have the fancy car, they have all the toys. But a lot of them are living off of credit. And they have good cash flow, they can make their payments, they're okay. But if they were ever to get sick and stop working, they'd be in really big trouble. So if you can come along and show them how they can create passive income and how you can be strategic and buy these properties and why It's not going to just, in addition to putting extra cash flow in your pocket each month, how it's going to appreciate, and you're going to eventually be able to quit being a doctor if you want. When you teach them all this stuff, and you can add value to them, it becomes very easy to work with them. And they typically have access to pretty decent money. They usually hang out with other doctors on the golf course. So I have one of my students, he came on one of my Texas tax detour, and I talked a lot about raising other money on that tour. And his very first money partner, right out of the gate, he found a plastic surgeon that lives close to him. And he's done. He doesn't have to find another money partner ever again, just that one contact. I'm not saying it's going to happen to you. Quite often you're going to find people, maybe they've got 10,000 or 20,000 who want to work with you. But all it takes is one person that will totally change your real estate career, who's got deep pockets and doesn't know how to invest with it. So if you can become the solution, and I mean, you guys all showed up here, so I know you're networking and you're meeting people and you're educating yourself, which is really important. If you're doing all those things, that right person you will stumble upon eventually, and that will change everything for you. So you don't have to just wait for your property to go up. You can go out and find, doesn't matter how successful you are, you're always going to be looking for money. Because when you get bored, and I don't suggest you use real estate for excitement, I recommend you be very conservative, let it make money for you, and then go spend your money however you find it exciting. But eventually people tend to get bored, and they tend to jump from the residential world to the commercial world, or bigger projects. So you're always going to be looking for more money, no matter how successful you get, because you can always fill your business with more money. So to answer your question, you're always going to be looking for JV partners to build up quicker, and then when the opportunity comes where the banks loosen up in the U.S., then you'll be able to refinance, and then the bigger portfolio at that point, then you can really do some damage. Anybody else? Go ahead.
So this year there's a new tax requirement where we need to disclose assets about $100,000 in our tax department. So if I do have a joint venture partner and my assets about $100,000, do I still need to disclose that?
So his question was, because you have to disclose certain things, if you have a joint venture partner, do you have to disclose? Well, if you have a 50% interest in something, that's different than having if you have half the pie, it's different than 100% of the pie. In addition to that, if you have the right structure set up, you don't necessarily have to disclose because you don't own it. Your company owns it. So, for instance, if you look at Walmart, the CEO of Walmart isn't disclosing, well, I own all these, all this inventory. He doesn't own it. The company owns that. So there are ways around that as well, and that's a whole other conversation. That anytime we get into these tax things, they usually can lead to a very, very long conversation. Where I can stand here for the next 5 hours just talking on that one topic. So you just get home and be happy to talk to you about some strategy for that. Oh, go ahead.
So in Canada, I know you can use money from your RSPs and your tax-free savings if it's self-directed to invest in real estate.
Right.
Can you use it to invest in real estate in the U.S. or only in Canada?
Okay, so her question was, in Canada we can use our TFSAs and RSPs to potentially invest in real estate, and can we do that in the U.S.? No, unfortunately we can't for the most part. There's ways around that. They're very complex. For the most part, the answer is no, we can't, unfortunately. You first, and then I'll get you some.
Do you do flips too, where you buy the property, rehab it, and flip it right away?
Yeah, absolutely. We do that a lot in Mark's in here somewhere. Mark just did that on a piece of land, Barry's way in the back. He's one of my students. We do that a lot, especially in a place. If I was going to do a flip, the best place to do that right now, in my opinion, is at the tax deed auctions. They take place in Houston, Texas, first Tuesday of every month. And then we see properties for pennies on the dollar, considerably less than market value. So if you're going to flip, the biggest challenge is that getting inventory can be very difficult in a lot of the markets. Like if you go to Vegas, very competitive. I mean, a lot of these markets are very, very competitive right now. So, and your competition is typically these days it's hedge funds. It's not mom and pop investors. It's hedge funds and banks, and they're all getting in on the real estate game. Because a few years ago, Warren Buffett went on CNBC, and he basically said, "Hey, if I had the manpower, I'd buy several 100,000 single-family homes." So all of a sudden, all these people took notice, because Warren Buffett doesn't usually talk about real estate. He's heavily invested in it, but he usually talks about, buy Coca-Cola stocks. He basically talks about the stocks that he owns, so people go buy it, and he can influence the market. So when he actually came out and said he would buy several 100,000 single-family homes, all of a sudden these people on Wall Street said, "What? Did Warren Buffett just say that?" And they all got into the real estate game. And so now your competition is these guys with billions of dollars of other people's money. And because it's other people's money, they don't really they're not really looking for great deals. So they're willing to outbid you to get the properties. So you've got to find a way to take advantage of the opportunity, but outmaneuver the big guys. And so the best way to do that is to do things that they either don't know how to do or don't want to do because it's too much work. And so that's why I actually run a tour in Houston, usually about 3 or 4 times a year. It's a 4-day tour, and I teach my students specifically how to outmaneuver the competition at that auction. And because these big players, you don't have a chance against them in any city that they're working in. They're bidding these properties up. And so, so there is definitely opportunity to flip properties, but you have to have a strategy for acquisition. That's the toughest part right now, is the acquisition. Getting rid of them after you got it, in most markets, is really easy. So,
Can you do those auctions online, or do you have to be physically?
Well, here's the thing, yeah, there are auctions online. The biggest problem with the online auctions, though, is the more accessible it is. Like obviously if it's online, somebody in Australia can bid on it, somebody in England, and somebody in Singapore. So once again, you have more competition. So what I've done in Texas, for example, is I've created a team down there. So that if I want to bid, or if any of my students want to bid, you don't have to fly to Texas every month. They'll actually go and they'll do most of the work for you. So they'll go and they'll videotape the properties, they'll pull title for you, they'll go bid at the auction on your behalf. So I've got a bid by proxy team down there, so you don't actually have to fly there. So whenever it's online, though, the easier it is to access and the more competition. Most of the stuff that I've seen in online auctions tends to go in your market value. So it's very difficult to get stuff there.
Do you have properties in any other countries?
I've just got stuff in Canada, stuff that I bought a long time ago that I haven't sold yet, and US. I haven't invested. I've looked at other countries, looked at Costa Rica, Nicaragua, started to look at Ireland and Spain. But I mean, the opportunity is still good in the US right now, and it's close to home. So that's just for the future. After the US turns around, I'm looking for my next opportunities, but I'm in no hurry to get there. Just go build a team. You know, across the world is very difficult and costly. So, sorry, which question did I miss over here?
Actually, you answered it. I question was, do you prefer a short-term or a long-term approach to the real estate?
Okay, well, I love both. I'm a really big. This question was, do I prefer short-term or long-term? I'm a really big fan. I think every investor needs to create a portfolio of cash flowing property. You need to create passive income for yourself. Because flipping homes is great, it's fun, and it can be profitable. Most people can't make a living doing it. Because they get one, maybe you get a property, and then it's a long break between that and your next property. So number one is the ability to get these properties over and over and over again, unless you have a lot of money to play with. The second challenge is that if you ever get sick, once again, just like those doctors, if you ever get sick, you're only as good as your last flip. That money stops coming in. If you create a portfolio of properties that pay you month after month. I've got a property in Calgary that I've owned probably for 18 years now. For the last 18 years, it's put food on my table, and that amount of food it puts on my table has gone up because rent's gone up with inflation. So is food, but the rent has gone up faster than that. So everybody, in my opinion, should be striving towards building that portfolio. But a lot of people, especially when you're first starting out, a lot of people come on my tour because they want to flip some properties so they can have some more capital to play with, so they can eventually start putting properties into that portfolio and start living off the proceeds. And that's how you get out. If you're, for any of you are in a 9-to-5 job that you hate, like I was when I worked for the phone company, that's how you get out of the phone company or whatever you're doing, is to create passive income streams where the money comes in every month. You don't have to do the deal once, you get paid for it forever. So I recommend that for everybody. Doing an odd flip here and there is certainly no harm in that if you get the right property. But trying to live off it, I don't know very many people that can do that. So go ahead.
So what do you think are the key parameters that you're looking for in one of these new upcoming cities to know that you are actually going to be getting the return that you think you should be getting, and it is indeed an expanding market?
Right. Okay, so his question was, how do you know when you're picking a city, how do you know that you're picking the right market? What are the things you look for to make sure that, one, you're going to get that appreciation, and to make sure that city makes sense? So there's a number of things I look for. The first one is I want to know, is it landlord friendly or is it tenant friendly? So if I look at a place like California, I spent a lot of time in LA and San Diego. I spent a lot of time in California. But I'll never buy a piece of property there because it's extremely tenant friendly. So if you get a bad tenant who's not paying rent, they might not be paying rent, they might be trashing your home. If they know how to work the system, and all bad tenants seem to know how to work the system, it's going to take you almost a year to get rid of them if you go through the legal process. It's going to take you almost a year. So if you figure out, if you have a mortgage payment that you've got to make every month on that property, the bank's not going to say, oh, well, you know what, whenever you get rent, you can just pay us. They're not going to do that. So imagine what that's going to do to your if you have to take money out of your pocket every month to support the property, you've got no revenue coming in. At least if it was vacant, you can at least have a chance of putting somebody else in there. But if you've got somebody who's not paying, that's the way it works. So number one thing I look at, is it landlord friendly? And that's why I love Atlanta. If we get a bad tenant, they're gone in 3 weeks. I don't care how well they know the system. I don't care what they say to the judge. They're gone in 3 weeks. Simple as that. So that's the number one thing. Number two thing, I'm looking at what's happening with the population. Are people moving there, or are they moving away? So when I look at places up in the northern U.S., the cold places, or just in general, even if we took the whole recession out of the equation, all the baby boomers are heading to warmer climates. You don't see somebody in Florida saying, let's move up to Ohio. I think that would be a really good move. Nobody's doing that. None of us are saying, let's move to Northwest Territories for our retirement, right? So everybody's heading towards the Sun Belt, number one. Number two, people will always go where there's jobs. So you look at Kansas City, jobs. Atlanta, jobs. Texas actually, in Houston, they created 2.2 new jobs for every job that was lost during the recession. So that's huge. They're building the world headquarters for Exxon there. So these are things that I'm looking at is, are people moving there, and why are they moving there? What's going to create this movement towards there? And then number three I'm looking at is, what's my return on investment going to be? I want to get properties that make sense. They're going to put, once again, food on my table every month, where I've got a good return. Also, another thing I'm going to look at is, when you have a place where the return is high, automatically there's going to be a really good chance of appreciation. And the reason for that is you've got all these tenants, and they're paying a lot of rent. Like I look at Kansas City, and a $90,000 or $100,000 home, they're paying me $1,100 or $1,200 a month in rent. These people could own that property for a whole lot less than they're paying me. So the first thing they want to do, as soon as financing becomes available, they're going to be home buyers. When you have all these renters making that mass exodus from renting into buying, they're going to push those prices up. So I want to have as many properties in my portfolio before that happens. I don't want to wait till I hear it on the news that, hey, this is happening, everybody's buying. I want to already be ahead of the curve. By the time you hear about it in the newspaper or on TV, it's already happened. So you want to get into those markets where the rent is high compared to the purchase price. So those are my main parameters. That's the starting blocks from there. But then you also have to look at things like, well, what's the opportunity? It's great that it makes sense, but who are my competitors in that market? What are my chances of actually getting inventory? So luckily, I've got some teams, and we've raised a lot of money, and we can outmaneuver a lot of our competitors. In Atlanta, for example, that's a very popular market for the hedge funds. And normally, I wouldn't be able to get properties there. However, I've got somebody on my team, his only job is to go schmooze the bankers all day long. These bankers, they get paid the same amount whether they sell the homes for X amount or Y amount. So they don't care. So it's built on relationships. So we build those relationships, and that allows us to continue to get properties. But a lot of my competitors that used to buy in Atlanta back in the day that were my competition, they're long gone. They moved on to other places. And the hedge funds are actually buying off us in some of the areas that we're working. We pretty much have all the inventory. So it's also going to be, well, as I mentioned, your ability to actually get properties. It's one thing that the opportunity is there, but can you get your hands on it? Does that help? Oh, go ahead.
For us that don't know tons about, investing and stuff in the real estate and U.S. and things like that, what are some of the resources you recommend for us to research and to learn a bit more, and I guess what's reliable and what's not?
Well, unfortunately, what I see is I see a lot of different companies that go across Canada giving information. Once again, a lot of it's misinformation, just like the tax question earlier. I could easily just give you a solution. You guys most of you wouldn't know the difference. I could just make something up, say, yeah, you want a C Corp or you want an LLC. I could do that, which is quite often what they do. There's a lot of misinformation out there, so what I've done is I've actually created a YouTube channel with a whole bunch. I think I've got around 100 free videos on there right now, so I can direct you to that. Matter of fact, I've also got I've got a video series. If you guys text me at this number, your name and email address, that's supposed to be 399-3464. I'll send you guys some. I'll give you the link to the YouTube channel, and I'll also send you a bunch of free videos that'll answer a lot of your questions. And that'll it's all free, so you have nothing to lose by checking it out. So just send your name and your email address. Steve?
Mike, I find actually what's working well for me is, as far as flipping versus renting, is I'll flip 3 or 4 by 1, and that equation seems to be working out quite well.
Yeah, that's good too. I mean, that's one of the things I teach on my tour is that, flip a couple, but hold one. But always be thinking about the long term, and thinking about where you eventually want to get to. And if you want to create freedom for yourself, that's the most important thing to me, is I love to travel, and I get to travel tons, and the money keeps coming in whether I'm working or not. Because of the stuff, I'm still getting paid on stuff, like I said, that I did 18 years ago, I'm still getting paid on it. So always keep that in the back of your mind, that eventually you want to have that passive income. So doing flips is great. If you find the right property, make some money, absolutely, but reinvest it and start to keep some of the stuff that you're buying, because you know, as I showed you that chart earlier about the real estate cycle, it goes around and around. Well, the big money isn't, you know, you take a property, if you flip it, make 20 or 30,000, that's great. But I look back at some of the properties I sold in the past that I made, you know, maybe 20 or 30,000 on. They're now worth 400,000 or 500,000, 600,000 more than I sold them for. I could just kick myself for doing it, but at the time it made sense. So a lot of times I would recommend giving up those short-term gains for the long-term gains, as long as you can afford to do so. You know, basically, if you're just starting out, you don't have a lot of money to play with, let's start off small, let's build that capital up, and then start keeping some properties in your portfolio. Go ahead.
So, you were, at the beginning you were mentioning about 1031 exchange. You said sell house and buy a new house within 1 year and you don't pay capital gain tax. So were you referring to the capital gain tax in Canada?
No, that's only in the U.S., which is one of the biggest advantages to the U.S. is that 1031 exchange. So she asked about the 1031 exchange. One, you have to hold the property over a year, so if you flip it 2 days later, you will pay the capital gains.
But if you do your taxes here, then you should pay the...
Oh, so she's asking if you pay your taxes here. But here's the thing, is that the CRA doesn't recognize the 1031 exchange. So if you know you're going to be trying to take advantage of that, I'm going to help you build a certain structure so that you don't have to deal with CRA. As soon as CRA deals with it, what would happen, let's say you did that deal I showed you earlier, where you made $50,000. And let's say in the U.S. you pay $10,000 tax, just make up numbers. Well, when you file your tax return in Canada and you say, oh, I'm using the 1031 exchange, you're going to say, well, we don't recognize the 1031 exchange. So now you paid zero to the U.S. because you took advantage of it there. You're going to pay 100% of the tax. If you would have, so if it would have been a $20,000 tax here, you're going to pay all $20,000 to Canada. So there's different structures, and I can help you set that up where you won't pay any tax to Revenue Canada or CRA because it'll keep it out of the Canadian tax system entirely. So there's ways to do that. I can teach you how to do it, but that's a lengthy conversation.
Okay, I like that.
Go ahead.
Yeah, with the advent of technology, we're seeing sites like VRBO and Just Eat. How do you feel about short-term rentals in vacation areas?
He's asking, what do I think about short-term rentals in vacation areas? That's a whole different business. I personally don't do it because I see it as being, although I would get teams to do it anyway, it's quite labor-intensive. And if you get the right market, absolutely, I know people are making a fair bit of money, you know, on VRBO and what's it called, Airbnb. And I know people that are doing it, they're doing okay with it. For me, I'd rather just have long-term rentals, keep people on there for as long as possible, build relationships with them, and then hopefully sell them a home one day as well. And so that's more my style. So it doesn't mean that that's wrong. It's just not it's not how I've done it. There's more than one, there's 100 different ways to make money in real estate. But I would caution, make sure that you have a really good team, because there will be a lot of wear and tear on the properties. And I've seen some people do very well with it, and I've also heard some horror stories. And also really research your market, because you know, some of the markets are obviously very seasonal. So part of the year you're getting really good revenue, and the rest of the year it's doing nothing, and you know, potential for vandalism, stuff like that. So just kind of keep an eye on that sort of thing. Anybody else? Go ahead there first, then I'll get you second.
Well, you mentioned about the financing available. So is there financing available only in the U.S. or is it available somewhere else, maybe Europe or?
Well, is financing available in Europe? I have no idea. I haven't looked. I haven't gotten that far with Europe yet. In the U.S., it's kind of funny because the banks. I've done a lot of hard money lending. And so I always look at the banks and think some of the stuff they do is just totally ridiculous. It's just totally ridiculous that they're lending, you know, when you're at the top of the curve, which is just asking for trouble. Now, on the one hand, I think it's ridiculous. On the other hand, they know, and we know, that they're going to get bailed out by the government anyway. So if you knew you had that safety net where if you screw up, you get your money anyway, then they're actually being really smart. For me as a private individual, when I'm lending money, I'm going to do a whole lot of due diligence before I lend out that money. And I'm extremely happy to lend when things are really low. I'm not, when everybody's fighting over property, I know that that's not sustainable, and I know that a lot of these people won't be able to afford that payment as the market corrects. So I do the opposite of what most banks do. But to answer your question, I'm not sure what they're doing in Europe. I imagine the banks are being pretty tight right now because they're struggling there too.
Maybe I need to rephrase it. Is the private financing available for investments in Europe, or is it just for?
I really don't know. I haven't looked that far over Europe yet, to be honest with you. I imagine it's tough. And it would also probably vary a lot by country, because all these places like Greece, Ireland, Spain, some of those countries are struggling big time. Their banking is struggling. There's probably other countries that aren't doing as bad. I haven't researched yet.
And that's precisely the point, because the euro is going down, and probably will reach parity at some point, and probably get houses in
Yeah, there's absolutely going to be opportunity in Europe. However, like I said, I mean, with the U.S. being our neighbor, and you know, very easy access to the country. They're very open to foreigners investing there. For me, I've already figured out the system. I know how to do all the taxes. If you pick a new country, you got to start from scratch, because just because it works in the U.S. doesn't mean it's going to work somewhere else. So you're not just looking at finance. You got to look at tax laws, ownership laws. There's a whole bunch of different factors you have to look at. So to me, the U.S. is low-hanging fruit right now. I'm going to keep working it till it doesn't work anymore, and then I have on my radar some different countries I'm going to research, but I'm not in any hurry to jump ship. So I'll keep working it as long as it works. So, and the question was here.
What strategy used to acquire some of the properties with us, not being retail or close to retail, nonetheless, so some of the different ways that we do that?
Well, for his question is how would you guys be able to get properties? Well, it really depends on what you're trying to achieve. So, for example, if you're looking to do flips, I strongly recommend the tax deed auction. That's where, once again, you can outmaneuver your competitors. The prices are lower. I mean, there's no competition. That'd be a lie. There's definitely other people at that auction, but a lot of them don't know what they're doing. So if you can, if you know what you're doing at that auction, you can do very well. Mark in the back there, you just flipped it. What you paid what, 12,000? You sold it for 25.
25, yeah.
A couple months.
6 months.
6 months. Yeah. So there's potential with that auction. If you're the other way, what I do is, like I said, we've got fairly large amounts of money to play with, so we go and buy directly from banks. Now the banks won't even talk to you in most cases, unless you, depending on the bank, they usually want to see $5 million to $10 million proof of funds before they even show you what they have. And they're selling in bulk. So if you have the ability to buy in bulk, that's another good way to get properties. If you're trying to get one at a time, a lot of my investors come to me. You know, they're the doctors, lawyers, engineers. They don't necessarily want to do the work. They want it all done for them, and I'll help them. I have you know, a bunch of turnkey properties where everything's done from start to finish. It's already fixed up. There's tenants. All that happens for them is they just get money in their bank every month. And that's what I do in Atlanta. That's what I do in Kansas City. Then for people who actually want to learn how to do some of the stuff more hands-on, then I take them down to Houston, Texas, and I do that 4-day mentorship where I teach them how to take advantage of that auction. But if you're not on the ground, you're definitely going to have to build a team somewhere, unless you have the ability to hang out in a certain city and you know, learn the market, meet the players there, you know, build up your teams. So if you're just starting out, that's why I do what I do, is to help Canadians who don't necessarily want to go do all this work. So there's a lot of work involved in starting out. Get you, and then I'll get you.
I did some research on tax deeds / tax liens, and Texas is, in fact, the most profitable state in which to do it. And I was really fired up about it until you look into it a little closer. And it's only advantageous if the homeowner doesn't pay back those taxes that are outstanding.
That's actually false.
It is false. Okay, so that's one misnomer I have.
Okay.
The second is that my understanding with Texas is that there are like huge retirement and pension funds and so forth that are going there, that you'll be up competing against, and it's really a huge business. And so that was a little bit.
Now, to answer that second question, not a lot of this particular auction that I go to. There's not a whole lot of big players there.
Okay.
But to answer your first question, I'll go into a little more detail. So her question was, the only, or her comment was, the only way to make money at the Texas tax deed auction is if the people if they don't pay back. So let me explain what that means.
In some states, my understanding was that you could actually end up losing money if you didn't hold the tax deed for, I can't remember what the time frame was, like more than 2 to 4 years or what have you?
Yeah, I'm not sure about that. I can only talk about taxes. That's the only place I do this.
Okay.
So I'm going to explain.
Yeah, this will be good.
Yeah, so what a tax deed is when somebody hasn't paid their property taxes for 3 or 4 years, eventually the county needs that money. They use that to keep their schools open. I don't make 25%, I'm making even more, typically. So I had one of my students phone me up, and he goes, man, I can't believe it. I go, what's wrong? He goes, the people redeemed, and I only made 25%. I go, well, before you met me, did you ever, in any 6-month period, make 25% of your money? So it's funny how your frame of reference can change once you get spoiled sometimes. But these are the only real 2 outcomes you can get. I'll let you finish it. Go ahead. I had a question over, who was it?